Many people, as many people are confusing their success over the past 14 years as their skill. But this market environment is what's separating the wheat from the tares. It's the bear markets that really, it's like what Warren Buffett said, when the tide goes out, you find out who's really swimming naked, don't you? All right? And there's a lot of people swimming naked. There's a lot of people who were confusing they had leaky boats, but the rising tide, the rising market even raised the leaky boats. In a bear market, the leaky boats go away. They get destroyed. Only the best boats survive. And I want that to be you. And I want you to have a leak. I want you to be able to handle yourself in this type of market environment. So here we go. How to win in a bear market. This is how we win. All right? Right there. That's how we win. That's it. Now I can go home. Now, not go home. Now I can go out. I can leave you. We're done. Finished. Take a snapshot. Presentation's over. Bye. No, I'm teasing. I'm teasing. But listen, guys. In a bear market, you do three things. You understand? You predominantly do these three things. So let me go back to it, but I need you to understand. If you can limit your play to three things, three locations in a bear market, you're going to kill it. OMG, you're going to kill it, traders. If you can just do these three things, let's get to it. Look, three things. Now, notice there's two, because we're in a bear market, there's two short or sell locations. I want you playing these two. Notice that there's only one buy location. I'm eliminating this one. Remember the buy one down there? No. Let's drop that one in a bear market. We're going to only keep this one. All right. This one in a bear market, the odds drop on that one. It's still decent, but I just want you to have the creme de la creme. So let's eliminate this one. This is in a bear market and a bull market. You can't let this go. This is too sweet. That location is too sweet. That location's odds don't really drop very much, irrespective of what market. Trending up market, trending down market, trending sideways market. It's still very powerful. We got to keep that one. But you're going to predominantly be playing this and that, this and that, this and that. I'm going to do it over and over again. This and that, this and that. Occasionally, you're going to do this one, because there's some days you get that one. But then this and that, 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 and occasionally this one. This requires discipline. To not get pulled by a shiny object over there that's not one of these three. To not be excited by some freaking news story that a minimum wage typist was paid to type the news. Like, that's freaking important? Really? Oh, but the news said, forget the news. Oh, but Oliver, earnings, it was good earnings. Forget earnings. It's not your earnings. You don't get any of the money, do you? Forget earnings, forget news, forget tips, and forget chat rooms with a bunch of novices talking all day long. Forget that. I want you to focus on three locations and two bars. Three locations, two bars. Told you this is simple. There are people who say, Oliver, there are adults who come to me, Oliver, you know, I have a young teenager. Do you really think they can really learn how to trade? Do you really think so? I said, well, it depends. They said, depends on what? I said, well, can they count to five? They said, what? Can they count to five? Well, of course they can count to 5. Well, then we're fine. They can do it. Maybe they won't, but they do have the capability of doing it if you can freaking count to 5. 3 locations, 2 bars. 2 colors, green and red. 2 positions above the moving averages, below the moving averages. 2 states, narrow, close together, wide. 2 directions, up, down. 2 actions, buy, short. 2 results, win, lose. I mean, this is a freaking game of basic arithmetic. We never get past 5. We barely get past 3. 3 locations, 2 bars, 2 colors, 2 moving averages, 2 states, wide, narrow, 2 locations, above, below, 2 actions, long, short, 2 results, win, loss. We barely get past 2, 3. And there's millions that are overcomplicating this game. It's crazy. Unnecessarily complicating a basic primitive game. You can freaking flip a coin. Heads I go long, tails I go short, and do better than some of these bozos out here who are overcomplicating things. I don't want that to be you. I don't want that to be you. All right? Don't want that to be you. So let's go. Let's keep going. Now, these 3, if I can get you to play long in that position, whenever there's one of those 2 bars there, but your predominant play is going to be shorting in a bear market in those 2 locations. Now, let's take a look at some real live trading examples. Guys, all I did here, listen to me carefully. All I did here, every time I come to speak with you, especially live, what I like to do is I like to use the day of my live event. I like to use examples that day. Or if it's on the weekend, I like to use Friday. All right? Why do I do this? Because I don't want you thinking I went back in the past to cherry pick the best days, the best weeks, the best months, the best market environments to bring you the perfect examples. No, I go right to one day to show you if you knew this yesterday, look at what you could have done. And whenever I do live on a market day, I show you trades from that day to say, if you knew this before this presentation, look at what you could have done. Now, it's going to be important that you take what we cover here into the market on Monday and start doing it to make it yours, not mine. See, right now, it's still mine, but you make it yours by fumbling with it, by doing it, by messing it up, correcting yourself, doing it right. That makes it not mine anymore. That makes it yours through experience. But this is why I do this. Now, I do have some outliers. I do have some things that did not happen yesterday. The majority of things happened yesterday. But the reason why I had to go a little bit beyond yesterday is because yesterday was bullish, but we're in a bear market. Now, remember, in a bear market, you can have bullish days. So I had too many bull scenarios yesterday, but I need to show you bear scenarios because that's the 2 out of the 3 things you're going to be doing. Playing the bear side. It's just that yesterday didn't give me enough bear examples. So I had to go beyond yesterday to grab some bears because yesterday was so bullish. That doesn't mean we're out of the bear market. That just means that we had one day of bullishness. All right. So let's get to them. All right. This is the good part, guys. The good part. All right. Let's do this. What is this? I think I did it wrong. Okay, now guys, right before this, I grabbed a 15-minute chart of BTC. I actually tend to predominantly look at BTC when I'm checking the price through the eyes of the 15-minute chart. But one of the things I want to bring your attention to here, if I can, is I want to bring your attention to the moving averages. Now, look at the 20-period moving average. Look at the 200-period moving average. Now, if anyone tells you that technical analysis doesn't work, where these moving averages don't mean anything, what do you think that is? Now, it's important to understand, guys, that moving averages are not skinny lines as your charting package would have you believe. They are actually zones or fences that you can lean on. They're not these skinny lines. They're more like zones. And so these are not necessarily breaks. They're just leaning on the fence like boxing ropes, leaning on the boxing ropes, leaning on the boxing ropes, but not breaking the ropes. All right. So the thing I want you to see, try to disappear in your mind the price and just look at the moving averages. Imagine the prices are not there. And you will clearly see the breathing cycle. 20 coming down to the 200, narrow state. Wide state, right? Wide state, narrow state. Imagine the prices aren't there. Now we're back to narrow state. Narrow state. You'll have different levels of wideness. Wide state. You get the point. All right. So obviously, anywhere near a narrow state, you're looking for, you see that power elephant bar there? I don't know if you can see that. Boom. Right? Look at that green bar right there from the narrow state. Got it? Okay. If you want to play it back down, you're waiting for the solid red. Boom. Right? Solid red. We don't trade Bitcoin, but I did want to show you the Bitcoin chart in this respect. But very, very powerful, guys, knowing where you are in the cycle. Now, this is a trade from yesterday. So when you want to know what date we're looking at, guys, it'll be in the bottom here, the 5th. That was the yesterday, the 5th, right? Now, the time frame that my traders use for trading predominantly is the 2-minute chart. I want to show you where that is. That's a 2-minute. That's where you can see what time frame. All of these charts will be 2-minute, and here's where you'll see the date. So this means that every bar you see represents 2 minutes of trading. And right on this 5 is the first 2-minute bar of the day. Now, I want you to look at the state at the beginning of yesterday. Look at the state. Look at the 20-period moving average. Look at the 200. Can you get more narrow than this? No. They're freaking kissing. They're in bed together, making out. Can't get more intimate than that. Can't get more narrow than that. And you get that explosion out. Remember I told you, even in a bear market, this is what you want to play. You want that green circle there. Remember? Let's go back to it. Let's go back to it. I don't want you to forget this. Let's go back to it. Give me a second. Let's go back really fast. You want this. That location right there. Okay? So that's what we have in Coca-Cola. We got that location. Well, we got that location right here. We had that location with Bitcoin here. Boom, right there. Boom. Okay? As an example, we got that location here. Boom. With Coca-Cola. Beautiful. You've got Dollar Tree here. First bar of the day. Boom. That location. Right there. Love that sound. Guys, I will tell you this. I will tell you this. If you play these locations, if you play these two bars, right? Oh, what happened? Uh-oh. Give me a second here. What happened here? Where is the image? My image is gone. Guys, I'm hoping you can see my image here. Let me know if you can still see my image. But I will tell you this. If you can play these two bars, is my image okay, guys? Just let me know. Is my image okay? If you can play these two bars, right, in the right locations, this has the possibility of changing your life. You understand? No image, no image. No image. God, what happened here? I am not sure what's happened here, guys. Uh-oh. It says I'm still live. I don't know what to do. It says my connection is good. Let me just see if I can change it here. No image. Oh, goodness. Not quite sure. Image is okay? All right, image is okay. Good, 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 good. Okay. All right, no, just me. Do you see me? You see me, right? You see me? You see me. Just I'm showing me right now. All right. Good. Because it says my connection is great. Okay. Okay, cool. Good. So this is good then. All right, fantastic. We're good. All right, let me go back here. Now I'm going to bring you back the image. Okay. All right, so you play boom. Remember, you want to get in that bar toward the end of the bar's formation. So if it's 2 minutes, then get in there a minute 30 seconds, a minute 40 seconds. You understand? A minute 30 seconds, a minute 40 seconds before that bar finishes, if it's in the right location. There you go. Remember, protect yourself under the bar. All right? Don't forget that. Always protect yourself under the bar. If you're getting into the Coca-Cola, get into this bar a minute and 30 seconds before the bar finishes. Protect yourself under the bar. All right? Okay. Good. Love it. Here's BJ's. This is yesterday. Here's the 5th. 2-minute chart. Boom. Get in that bar before that bar finishes. Protect yourself under the bar. The rest is history. I love that sound. Do it for me. Do it for me. I want to see it. I want to see who can do it for me. Do it for me, guys. Show me. Do it for me. Can you do it? I know some of you are not used to that sound. Some of your sounds are like this. No, you need to be. Now, some of your some of your sounds are like this. we're gonna fix that, right? They need to be. All right, guys. All right, let me get back. Let me get back here. All right, let's get back. Let's get back. I know I'm crazy, guys. My kids tell me, Dad, you stopped growing up at like 14. Yeah, it's probably right there. All right, so BJ's got someone was just asking. I saw, how do you tell the time of the chart? Every chart's going to be 2 minutes, guys. So here's the time, 2 minutes right there, and here's the date. BJ's. This is the symbol if you want to look it up yourself. BJ. All right. All right. BJ's Whole House Clubhouse. All right. But beautiful. Now, notice, guys, you do not want to be buying up here. That's the place that if you want to do anything because of the wide state, you want to jump into one of these fat red bars maybe and take it back to narrow. All right. So be careful. Be careful. Understand that in a bear market especially, you're only going to go long down in this area. You're not going to be going long at these wide states. All right. Good. Now, here's Oracle. Again, yesterday's date, the 5th, 2 minute time frame. Symbol is ORCL. First bar of the day. You want to jump inside that bar about 1 minute and 30 seconds after the bar is almost finished. Protect yourself under the bar. The rest is history. Remember when I told you how to play the neutral? Is you play the color game for neutral. So see how green takes out red? Boom. Green takes out red. Boom. Green takes out red. Boom. But you play during the neutral. This is during the beginning. And when you get wide, your best play is the other way. It should be very clear to you now. Should be very clear to you. All right. All right. eBay. Again, let's do it again. Yesterday's date, the 5th, 2 minute time frame, symbol EBAY. Right? Relatively narrow state, wide state here, narrow state there. Okay? First bar of the day, right in our perfect location. You're buying into that bar about 1 minute and 30 seconds before the 2 minute bar finishes. Once you're in, you're protecting yourself under the low, only lose 1 bar, and the rest is history. All the way to a wide state. Guys, this is just over. Like at a certain point, you should get freaking bored. They're like, yeah, Oliver, okay, I've seen enough. I'm bored now. You should get freaking bored because it's the same thing over and over again. Let me just tell you something. Let me tell you this. If you are overly excited, you're probably doing something wrong. You should be freaking bored because you should be doing the same thing like a freaking robot. Over and over and over again. Zero flexibility. Zero variety. This is not a game of variety. You want variety? I don't know. Go to a freaking candy shop and get a variety of candies, or go to an ice cream shop. And trading, there's no variety. I played these 3 locations. I played these 2 bars, the same freaking 2 bars, the same freaking 3 locations, the same protective stop, lose the same amount, 1 bar, boom, over and over and over again. You're a freaking robot. You're a freaking machine. You want excitement? Go to Disneyland. You want variety? Go to an ice cream shop. Be bored, but fabulously wealthy at the same time. Seek your excitement outside of the market. This is not supposed to be exciting. It's not supposed to be fun. It's enjoyable because you become good at it. But it's really like 30 years doing the same thing over and over again. The same way. every single time. No variation, no changes, no getting fancy. You want fancy? Go to Disneyland. You remember that campaign they did with the football players? I think it was Super Bowl. Now that you've won the Super Bowl, where are you going? I'm going to Disneyland. Disneyland. So if you want excitement, now that you've had another profitable day in the market, I'm going to Disneyland. So go to Disneyland for excitement, not in trading. You should be bored. You should be bored doing the same thing over and over again. Disneyland, Disneyland. Okay. So we got the eBay. We got the eBay done. If you wanted to, remember that state after wide, you can take that red bar, protect yourself just in case it doesn't work, and play it back down. All right. Now, it's not always off the open that you play this. It can be during the day. Look, this is well after the open, 11:30, 12 o'clock Eastern time. You go from wide back to narrow again, and boom! Perfect location, narrow state. And then you know what to do after you're in. It's just a color game, boom, color game, boom, color game, boom, color game, boom, color game, breakout game, boom, breakout game, color game. And when you get wide, no more. Make sure you don't keep buying into too wide. You get the beginning, you play the color game in between, and you go to Disneyland up there. Disneyland after. It's not rocket science, guys. It's not rocket science. Here's NVIDIA. Again, guys, from yesterday. These are all stocks we trade. 2 minute. Here's that. Here, instead of your elephant bar, you got a bottoming tail bar, but it's being born from a narrow state. So the gap is fine as long as the stock is gapping out of a narrow state. That's very important. This stock is gapping out of a narrow state. It's being born from a narrow state. All right. Boom. Protect yourself. The rest is history. Color game, color game, color game, color game, color game. All right. Once you get too wide, be careful. You play the beginning. You play the middle as the color game. If you want to play from this wide state, you got to wait for a topping tail bar or a fat red bar. You want to try to play this back. It didn't do very much, but that's the way you would do that. All right. PayPal, look at the gap up. It gapped up, gave you an elephant bar, but it gapped out of a narrow state, making it okay. Get in that bar, protect yourself. Color game after. Okay? Beautiful. Beautiful. Guys, this should be boring for you now. All right? This should be freaking boring for you. Look, you can't get more narrow than this on Tesla. Elephant bar, boom, get in that elephant bar. Doesn't have to be the first bar. Doesn't have to be a second bar. It can be any number bar. Just get in that first elephant or tail bar. Boom, that's the first one. Protect yourself, and the rest is history. Guys, I can show you over and over and over again. Look at AMD, narrow state. This is around 1 o'clock, 1:15 Eastern time. Boom, elephant bar, perfect location. The rest is history. Now, wide topping tail bar, go the other way. Boom. Wow. Now you're all the way back. Elephant bar. This is crazy. That's all the market can do is vacillate. You're at a wide state here. You got to play this way. But I was telling you, eliminate this in a bear market because the odds do drop a bit. But you can see how this one worked. Elephant bar from this wide state, and you go right back to narrow. Wow. Wow. This is powerful stuff, guys. Guys, think about this. Think about this. Think about this. How many people sloshing around all these markets every single day with their families' money, the little Robinhood account. I got a Robinhood account. Yeah. I got a Robinhood account. The little freaking Robinhood accounts. How many of them know locations? How many of them know where to protect themselves? How many of them know the different states of the market? How many of them know the best locations within that state to play? How many know exactly how to enter and where to protect themselves? How many know that if you only limit yourself to losing one bar, you're in this game forever? How many know exactly in a bear market where the two best locations to short are? How many know that in a bear market, the only best location to buy is here? How many know that? How many know how to play the market between a narrow state and a wide state, the color game? Like just this presentation places you, some of you may not grasp it yet, but it places you head and shoulders above the vast majority of people out there. And who's calling me? No, anybody who is calling me and does not know that I have a major live event today, they can't be that important in my life, can they? All right, let's go, guys. Let's go. I want to finish with you here. Euro USD. Guys, look at this one. See the wider state here? You got the topping tail bar and you got the elephant bar. Boom. Protect yourself. Right back to narrow state again. So we're going from wide to narrow to wide back to narrow. That's all the market can do over and over again. Boom. Boom. All right. Boom. It's literally that simple. It's literally that simple. I didn't say it's easy. I just said it's simple. Now, guys, remember I told you that the market, remember I told you guys that the market was so bullish on Friday that I didn't have enough of the short position to show you. It's just, they weren't there. So these are now not part of yesterday, but they are actual trades of ours, my trading team's trades. Okay? Basically trading based on the same concept I taught you today, but they're not from yesterday. All right? All right, so take a look. Here, you've got your narrow state, and boom! Look how beautiful that is. Bear elephant bar from the perfect location. Enter this bar, boom, add color change, boom. Guys, you can do this. You can do this. This is not rocket science. All of you can do this. You can follow two colors and two moving averages and two states and two locations. You can do this. Look at the narrow state, UAL, United Airlines. Look at the wide state. Look at the location. Boom! Perfect location to short. Now play the color game, until you get wide and then you stop. You can do this. These are real, actual trades, guys. Look at Morgan Stanley. Look at the narrow state. Boom. It's not rocket science. You can do this. Look at that perfect location there. Look at Apple. Narrow state, 20 flat, 200 flat. Elephant bar, perfect location. Boom. Color game. Boom. The rest is history. You can do this. You can do this, traders. Look at NVIDIA on this day. Look at how tight and narrow the state is. Look at where the stock starts its day, its first bar. Again, all of these are 2-minute charts. Boom! Protect yourself above the bar. And the rest is history. Moderna, narrow state. Boom! Perfect location. The rest is history. Drop. Color change. Boom! Drop. I can show you this thousands upon thousands of times, traders. Boom! Perfect location. Color game. Color game. Color game. Now you're wide. Over and over and over again. LVS, narrow state. Boom, perfect location. The rest is history. You can do this. Traders, you can do this. I have been shouting from the rooftops, shouting from stages all over the world, shouting from events, shouting from television programs, news programs for the last 30 years. That more than any other time in the past, this is the time for every individual to start a journey, start a path to gain financial independence, because your financial independence is under attack. That's right. Your financial independence is under attack. The powers that be want you to be enslaved, financially slow. So they want you to be financial slavery. They want to sell you on ideas of being mired in debt. They want to inflate your time and your savings away. They want to inflate. That's the theft of your time. And it forces you to be a freaking hamster and get on the hamster wheel and just have to pedal faster to get less and less every single year. You're pedaling faster, but you're getting less every year, despite the fact that you're pedaling faster. That's freaking financial slavery. And I will tell you this, trading is one of those very few activities on planet Earth that can give every single individual with a laptop computer and an internet connection the possibility of freeing themselves from this clown world. Financial independence. And I'm telling you, I'm here to teach you every single day of your life, without fail, every day, forever. I am here to give you all the money that's necessary to do this right, so that you don't risk your family's money, that you have no possibility of losing. You lose my money if you're going to lose, not your money. This program is changing people's lives. There are people in this group right now that are willing to admit to you right now that this has changed their life.
I have to define for you what is a move in the market, because we're going to use the market's moves to actually be able to identify the market's legs. But what do I mean by a market move? And are there more than one move? Is there more than one move that the market can produce? And the answer is yes. There are three specific types of moves. When I say when I'm talking about a market's move, I am talking about either type 1, type 2, or type 3 that you see here. All right. So I keep bumping into my mic here. These are the three types of bull market moves here, guys. So the first type is a strong, powerful surge to the upside in the form of largely one bar. All right, so it's a one bar move. Now, the period of the bar doesn't really matter. So if you're a 5-minute chart trader, this is a 5-minute bar. If you're a 2-minute chart trader, this is a 2-minute bar. If you're a daily chart trader, this is a 1 full day bar. Time doesn't matter. Everything that I talk about is universal across all time periods, okay? So the first type of bull market move is a violent, powerful, sudden, unmistakable surge to the upside in the form of one bar. Type number 2 is two powerful bars, not as elongated as type 1, but very powerful. Individual bars are powerful, but when you take them together, they're just as powerful as type 1. So by joining the two bars, as if these two bars, one is standing on top of the shoulders of the other, it kind of equals the power of type 1. So it's almost, type 2 is almost like the power move of type 1 divided into two parts. All right? Both are power moves or types of bull moves in the market. Now, type 3 is similar to type 2 in that it's not just one bar, but it's multiple bars. Now, it's not a specific number. Type 3 is not a specific number. Type 2 is. Type 2 is specifically 2 bars. It's not 3 bars. If it's 3 strong bars, it's type 3. If it's 5 strong bars, it's type 3. If it's 8 strong bars, it's type 3. Do you understand? Anything beyond 2 is type 3. But type 1 is 1 bar. Type 2 is 2 bars. They're strict in terms of the number. And type 3 is any solid move where the vast majority of your bars are the same color and they're solid, meaning that you don't get a lot of non-solid bars in the move. And this is very important. This is a very important point about type 3. It's not that you can't get a pause bar or a neutral bar in between. You just don't want a lot of them. So what makes a bull move is that it's fluid. What makes a bull move is that it doesn't have many interruptions. It doesn't have many resting periods or pauses. It just keeps going. All right? And so what you see across all three of these types, guys, is a solidity in the color of the bar. Type 1 is a very solid green bar. Type 2 is 2 solid green bars. Type 3 is a barrage of solid green bars. Those green bars might be shorter, but they're still solid. There's nothing shaky about them. There's nothing unmistakable about them. There's nothing kind of wishy-washy about them. They're solid, powerful bars, the majority of the bars that make up type 3. All right? Or types 1, 2, and 3. All right, so these are the three types: 1 bar only, 2 bars only, and a barrage of bars. Anything beyond 2 would fit into category 3. All right, we're laying the groundwork for this concept, guys. All right, of course, this is the reverse. This is the 3 types of bear moves. So when I say look for a market move, you're looking for a market or a stock or a financial item that is producing either one of these 3 moves: a single powerful bar to the downside, a 2-bar power move to the downside, or a multiple bar move to the downside. The characteristics of all moves is that it's fluid, it's virtually nonstop, It doesn't have many pauses or hiccups in between. The bars in each one of these scenarios is unmistakable. Even though type 3, the bars might be smaller, all right? The bars are still unmistakable. They're still relatively solid in the color red. They're solid in terms of their nature. All right. So these are the 3 types of moves. So when I tell my traders, look, go out into the market and find me a power bull move, they have to know how to go into the market and bring me back one of these 3. When I say go find, if the market today is down and it's negative, and I say, go bring me back 3, I want bring me back a bear move. They have to bring me back one of these 3 things. All right. There's only 3. So the market can only produce a move in 3 ways. The market can only produce a move in one of these 3 ways to the upside, and a market can only produce a move in one of 3 ways to the downside. This is building block number 1. It's very important that we understand this. All right. There's only 3 moves the market can make. Now, step 2. Understanding the 3 different types of pauses. Now, from this point onward in the presentation, I'm going to draw. I don't know if you remember me mentioning this in my last live session, traders, but I told you that I've been teaching traders for little more than 30 years now. I've been trading a little more than 40 years. And I will tell you that in my 3 decades of training, I've learned a trick or 2. I've learned how to drop knowledge and information behind people's prejudices. I've learned how to penetrate people's erroneous belief systems. So they come to me with wrong beliefs. And so I have to drop what I consider to be a correct belief over the wall of their incorrect belief that's blocking the correct belief. All right. So I've learned little tricks of the trade that can help me do that, that can penetrate your biases, get around the wall of your incorrect beliefs. One of the ways that helps knowledge sink deeper into the trader is to combine imagery like this and drawing on a blank piece of paper like I'm about to do. And when you combine the 2, something extra happens in the transfer of the experience and the transfer of the information and the knowledge. The act of the trader literally watching me draw helps to solidify the image perhaps that they saw without it being drawn in their faces. And so by combining these 2 types of styles, you actually get a deeper understanding. So I just want you to know why I sort of mix imagery with drawing as well. So I'm going to draw for you. There are 3 types of market pauses. Just like there are 3 moves, there are 3 types of pauses. And here's how they work. So pauses to the upside, the first type of pause is usually what I call a pullback pause. So you have a move up. Now remember, the move up can be any one. Remember guys, the move up can be any one of these 3. 1 bar move up, 2 bar move up, or multiple bar move up. Let's not forget, when I say move up, it can be any of the 3. All right? Okay. So we first have a move up, any of the 3. And then the first type of pause is usually a pullback, a retracement, a giving back of a portion of the move up. All right. That's pause number 1. Pause type number 2 is not a give back of price. It is a marking of time pause. You see, pause number 1 gave back price. That is a price-oriented pause. You're sacrificing gain to the upside to give the stock a chance to rest. The rest for the stock or the financial item is occurring because the stock is backtracking. Okay? In pause number 2, your stock or financial item is not giving back price. It's marking time, almost as if you ever see someone jogging along a street and they're jogging and they come to an intersection with a red light. And right, let me do this here. So they're jogging, right? They're jogging and they come to an intersection with a red light and they don't want to stop movement, but they can't go forward until the red light turns green, but they're running in place and then boom, they take off again when the light turns green, right? That's type number 2. All right? Now type number 2, where there is no sacrifice of price, there is just a marking of time. Type number 1, there's a sacrifice of price. You're giving back price, which is accomplishing the same thing. So in this scenario, it's more like your runner is running and comes across a giant water puddle. And so the runner kind of stops, all right, backs up, and then runs to leap over the water puddle. That backing up is what propels the trader, that gives the trader the might and the power and the momentum to leap forward and get over the puddle. Do you follow the 2 types? All right, I hope you're following those, okay? Let's get back to this now, all right? So type 1, we're backing back, we're giving back, we're losing ground, but to gain ground later. Type 2, we're just marking time. We're not losing price, but that marking time is allowing the stock or the financial instrument to rest as well. So stocks can rest and by way of type 1, and they can rest to get ready to continue to go upward by virtue of type 2. And type 3 is really interesting because type 3 doesn't really give a lot of, I gotta do this with this color, right? Color. Boom, boom, boom. All right. Now look at the difference. Look at the difference. Let me just do this black so I keep the colors uniform. So type 1 is literally giving back price, mildly giving back price, and boom, moving forward again. Type 2 is marking time, boom, and taking off again. Type 3 is just a brief pause. It is not as elongated in time as type 1 or type 2. It's literally like a hiccup of a pause, almost as if your runner temporarily bumped into someone by mistake. That bumping into someone caused them to hiccup, hesitate, break their stride a little bit, boom, but they're off in the same stride relatively quickly. The bump into someone that was walking slow in front of them interrupted the flow a little bit, but didn't stop the movement, the subsequent movement to the upside. And so these are your 3 different types of pauses. Now, let me explain this to you guys. This is very powerful. All right. I'm doing a lot of broad strokes here, guys. This is a lot of broad strokes. All right. And what I mean by that is there is a world. There's a world of powerful know-how built into what I just explained to you. Like I could literally sit here with you the entire day and do a deep dive into these 3 pauses. Do you understand? And maybe some of you do who are with me, but those of you who aren't with me on a day-to-day basis don't quite yet. But almost everything connected to your success as a technical trader is based in your understanding of market pauses. What's a market pause and what's a market turn? Do you know that there's a huge difference between a pause and a turn? And you have to be able to know the difference. How can you ever be successful if you don't know what a pause or a brief interrupt in the flow of a move is versus, is this a turn of direction entirely? Because there's similarities between the pause and the turn. And you've got to be able to know. So knowing the difference between pauses and turns are paramount. That is paramount. And then knowing, if you know how to determine what a pause is, then you automatically know what is likely to happen next after the pause. And now it's about, let's take advantage of what's going to happen next 8, 9 times out of every 10. But so this is so, I'm doing broad strokes here because that's what we're going to do on these Thursday sessions. But wow, each item, I can do a really, really deep dive into it and really take this to a very sophisticated level. But still, despite the fact that it's not as deep as it could be, it's still very, very powerful, guys. And that I just want you to know. All right, let's get back to it. Okay, let's get back to it. Now, so we've got these 3 types of market pauses. Now, those are the bull pauses. Now, let me just quickly, I know you know how to do this in your mind, but let's look at the market move down. Now, remember that market move down can be any of the 3 types of down moves. It can be 1 bar down, it can be 2 bars down, or it can be a barrage of bars down. Remember, move is one of the 3 types. All right, doesn't matter which one. So after a move down, a pause 1 is a give back of price, remember? So we retrace a portion of that downward move, a brief move to the upside. All right? And pause number 2, all right, is pause number 2 does not give back price, but it marks time. Okay? And pause number 3 is very brief, a hiccup. Shoot, I just bumped into this couple walking arm in arm. Boom! Broke my stride a little bit, but not for long. Boom! Got my rest. Now I'm off and running to the races again. Boom! Had to jump over a little small wall, so had to back up, and now I'm off to the races again to the downside. These are your 3 types of pauses. So guys, what I've explained to you so far, we've put the 2 cornerstones, in place to build on top of our main theses today, our main thing today, market legs. The 2 things that we put in place so far are, number 1, there's 3 types of moves. You got that. Number 2, there's 3 types of pauses. All right? And the next thing we're going to put in place is step 3, knowing the importance of the numbers 3 and 5. Now, let me explain this a little bit here to you guys. All right? Let's do this. I need to look into your eyes right now. All right? A very common question that I get amongst followers, by followers who are sort of not in the family, but sort of in the family as followers. One of the most frequently asked questions I get on the technical side is, do I have a belief or faith or use in my trading Fibonacci concepts? All right. Now, and the answer is yes and no. I believe in the efficacy of Fibonacci. I believe that it is a force in the universe that is very real. And remember when I told you that the markets are a microcosmic version of the universe of life? And so whatever's true for life or the universe has to be true for the market because it's a mirror image, albeit a smaller mirror image of the more cosmic universe or life. That is my philosophy. As above, so below, as below, so above. And so if Fibonacci, if we can find some measure of truth in Fibonacci in the universe and in the various sciences that are designed to basically study life in the universe, then of course it has to be true in the market. So yes, Fibonacci has been proven statistically and scientifically to be true in the universe, in life, in the world. We see Fibonacci increments and cycles in seashells and plants and planetary alignments and stars and da 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 da. It has efficacy, but I believe that there are many traders who take Fibonacci too far. They take it to the extreme. And just like anything else in life, you can take something so far that it starts to lose its importance. Now, what I'm about to explain to you is rooted in the concept of Fibonacci. There is something magical about the numbers 3 and 5 in the markets. What you're going to find and what I'm going to reveal to you is that markets will have a high tendency to turn around 3 or 5 cycles or somewhere in between. This number 3 and this number 5, and in the middle, which obviously we would say with 4, all right, 3, 4, 5, that zone is a very important market zone. In fact, I can say that that market zone 3 to 5 is responsible for my whole trading profitability. That everything I do is usually in between or at or in between those three numbers, those two numbers, 3 and 5. I'm doing something after 3. I'm doing something after 5. I'm doing something in between them. And I know that my timing is going to be better if I'm doing something around 3, 4, or 5, 3 to 5 in that zone. All right. And so what I'm about to explain to you is the basis of it is Fibonacci, because obviously we know that the number 3 and the number 5 are Fibonacci numbers. The number 1 and the number 2 are Fibonacci numbers as well. But 1 and 2 become important with different concepts. The concept that I'm explaining to you today has its importance rooted in the numbers 3 and 5. So just wanted to give you a little background behind these two numbers here. Let's get on with it, guys. All right. Now, so knowing the importance of the numbers 3 and 5. Markets tend to turn or have a tendency to turn after it's done something 3 times in a row. And if it continues, it has an even more powerful tendency to change after it's done something 5 times in a row. So 3 is the first stop, 5 is the second stop. All right, let me show you what I'm talking about. Remember I told you that there are three types, 3 ways a market can pause. So check this out. Here's market move number 1. Here's pause number 1. This is one move, interrupted by a pause. Boom! Here's move number 2, interrupted by another pause. Remember these 2 pauses, all right? And boom! Here's move 3 that is more likely now to have some type of change. Why? 3 legs have been achieved. And this is what we're talking about today. How to read the market's legs, the market's beautiful legs. All right. And if you traders can count to 3, you're going to be okay. And for you advanced types, If you can get all the way to counting to 5, you're even going to be better. All right. So many people ask me, Oliver, do you think that it's possible for anyone to really learn how to trade? And says, well, can you count to 3? You say, well, yeah, of course. Well, then I think yes. But can you count to 5? Well, yes, of course I can. Then you're going to really be okay. All right. Because 3 would capture about, guys, 70%. 70% of your turns, your changes in trend, your changes in the nature of the stock, in the nature of the move, in the nature of the momentum, in the nature of whatever the stock is doing, 70% change after 3 legs. Let's look at 3 legs on the downside. All right, I'm going to do it with the red, right? So you got move 1, pause 1, move 2. Oh, I did that wrong color. Move 2. Pause 2. Remember the 3 types of pauses. Boom! Move 3. So do you see the 3 legs? You see the 3 legs? Those beautiful 3 legs. The market's not a 2-leg animal. It's a 3-leg animal sometimes. Sometimes it produces a 4-leg animal. Sometimes it produces a 5-leg animal. But most of the animals that the market produces have 3 legs, 4 legs, or 5 legs. 3 legs up to 5 legs. Typically, 70% of the time, your turn's gonna happen in some way, or your change some way happens after the 3rd leg. So just knowing how to read legs and pauses and being able to count to 3 to 5 can have you playing this concept like a freaking pro. Do you understand? Do you understand what a pro is? Do you understand what a pro is, traders? Let me know. I want to see your responses while I grab a sip of water here. Do you understand what a pro is? And if you understand what a pro is, I'm not talking about a pro. I'm talking about a freaking pro. It's more than a pro. All right. It's more than a pro. I keep hitting my mic here today. All right. Boom. All right, guys. Watch how we put this together. This is going to be not amazing, freaking amazing. All right. Reminds me of my daughter, guys. She's 28 years old now, but when she was little, she used to teach me the new sayings in school and stuff like that, right? And I would say, "Wow, that's beautiful," and she said, "No, Dad, it's not beautiful. It's beauteous." I'm like, "Beauteous? What is that?" "Dad, beauteous is better than beautiful." Ah, okay, I got it now. Not amazing, freaking amazing. Do you understand? All right, this is going to be freaking amazing. Watch what I tell you. All right. Let's do this. All right, so we got that. Where am I? Oh, we're in the number 5, right? All right, let's do this. Okay, good. So we've got these 3 legs. Now, one of the things I need to make you aware of is this: that you can have one type of pause. Boom, pause. Boom, pause. Boom. You see? So you got leg 1, leg 2, leg 3, and the pauses are identical. All right? But you can have a variety of them, like I demonstrated for you. You can have this, you can have the pullback pause, boom, the sideways pause, boom. All right? Or you can have this this, boom. And so each one of these are 3-leg moves. 1, 2, 3. 1, 2. Do you see it? Don't get tricked by that brief one. 3. And these are all 3-leg pause. Now, it's not necessary for me to demonstrate for you a 4 pause or a 5 pause. It's just another pause after 3 and a continuation. It's just that I want you to understand that 70% of your changes come after the number 3. So only 30% come after the number 4 or 5. So understand that most things can't get past 3 legs. They can, but most things can't get past 3 legs. That's the most important thing I think you should understand here. All right. Now, are we ready? We're ready to put it together? Are we really this far already? We're ready to put it all together? All right, guys. Let's do it. Let's put this baby together. Let's put everything we talked about here together. All right. Let's put it together. All right. Give me a second here. Whew. Wow. All right. Boom. All right, guys. My love, my everything, Bitcoin. All right. We're going to use this special asset to demonstrate everything that I've taught you today about how to read a market's legs, which is based on how to read the market's different moves, how to read the market's different pauses, so that you can understand how to determine the market's legs. It is important to understand whether or not a market has, or a stock or a financial item has had 1 leg, 2 legs, 3 legs, 5 legs, 4. You have to know how many legs has this move produced right now. This alone gives you a huge advantage because you have to know where you are in the market's trend or cycle. Now, we're looking right now at a daily chart of Bitcoin. And I know for some this might look terrible. To me, it looks beautiful. All right. But let's take what I've explained to you about legs and let's apply it to Bitcoin. Shall we? Shall we? Okay. Yes, we shall. All right, let's go. Bitcoin tops out here right at the 200-period moving average. If you are even a casual follower of my work, this is no surprise that Bitcoin taps out at the flat overhead 200-period moving average all the way back in late March of this year. All right? And there was no surprise to us that Bitcoin was going to have a move back to the downside from here. Now, look at the relatively fluid move to the downside. Okay? And look at, I know it's not perfect. In real life, it's not going to be perfect, guys. But this is the relative pause. Now, your pauses in real life, they're not always like a drawing, right? Not going to be like, oh, Oliver, that didn't happen at a right angle. That's not a pause. That happened a little slanted to the downside there. That doesn't count, Oliver. We can't be that specific freaking strict, right? Your pauses sometimes are going to be pauses like that. with a slight upward bent. Sometimes the pause is going to be a little like that, slight tent, and sometimes it's going to be perfectly flat. Same freaking thing. All right, you got it. Now, we've got this drop basically and this pause of sorts here. All right. Now, leg one. Fluid, unmistakable move number two. And pause three. Pause two, right? So we got leg one and two, pause one and two. All right. Leg three, and pause number three. Now, remember what I told you 70% change in some form or another after how many legs? Let's see, boys and girls. 1, 2, 3. I told you if you can count to 3, you can do this. Now, is it possible for a fourth leg? Of course. Are the odds that we are at or near the bottom? Are the odds higher than not? Yes. Isn't 70% higher than not? Doesn't make another leg down impossible. All I'm explaining to you based on this concept is that we've got a 70% chance that this is the bottom. Guys, I have been doing this for freaking 40 years trading. I would say, let's call it 32 years of really approaching the market seriously from a technical perspective. I've been charting longer than most of you listening to me have been alive. Do you understand? I make the majority of my living off of this concept that I'm explaining to you right now. Being able to count to 3, to 5. My traders will tell you there's so much based on the number of 5 in my philosophy, in my approach to the markets. And so I want you to be able to read these legs. Being able to count to 3 to 5 and being able to read the legs and being able to determine whether something's a pause versus a turn is so paramount to proper market play. You've got to get this under your belt, and it has to become almost second nature for you. You should be able to look at a chart. Ultimately, you should be able to look at something and say, okay, it's on its third leg. I've got distance far away. My 2 moving averages are wide apart. And I've got time. That's another concept we will cover. So I've got 3 legs down. I've got wide space from where the 20 is and the 200 is. And I've been going down over time. Wow. All of these things are lining up to say we're likely the bottom. Now, we can never be certain. Anyone who tells you, traders, that it is possible to be certain without any shadow of a doubt, do you understand? Anyone who tells you that is either being intellectually dishonest or they're an idiot. And there's nothing in between that. You can't know something 100%. This is not a game of certainty. This is a game of probabilities. And this is one of the things that makes this art, if you will, for lack of a better term, this art we call trading, so difficult for people because the vast majority of people are out here in the markets searching for certainty. and it doesn't exist. They're searching for the Holy Grail and it doesn't exist. They're searching for something that can give them absolute assurance. And they fail to understand that this is not a game of absolute assurances. That it doesn't matter how long you study, how long you read, how long you practice trading, you can't ever be certain. And many people have a problem with this. Yet they understand in regular life that nothing is certain. But somehow when it comes to the market, they can't understand it. Like, for instance, we don't ever really truly have certainty if it's going to rain 2 days from now. We might get a weather report that says it's going to rain, but we can't be certain. But we can come up with probabilities. All right? I'm in the midst of a freaking rainstorm right now that is projected to last for the next 6 days. So yeah, 2 days from now, it's high probability it's going to be raining. That is not certain, but it's pretty freaking high. We live our everyday lives with uncertainty. We live the life of playing probabilities. All right? It's everywhere in our lives, but somehow this level of understanding, this intuitive intelligence is lost when it comes to trading, as if it's possible to know. You can't. And so we can't ever know if 3 legs down is the end, but we can know that it is highly likely. We can't know for sure if there's another leg after 2, but it's probable if certain things are in place. And so I always want to remind you of this, because I don't want you to take what I teach you on these Thursdays and think that it is going to lead to absolute certainty. No, this is why you're going to have to become an expert at managing the scenarios that don't work out according to plan, so that those that work out according to plan can reward over and beyond you protecting yourself for the few that don't. As long as we can keep the few that don't work according to plan contained, we can let those that do work flourish in a far more marvelous, spectacular way than the ones that don't. All right? And so, guys, this is how you do this. Before I close, I want to show you another time frame. We looked at the daily chart of Bitcoin. We're going to look at the weekly chart of Bitcoin. And we're going to take the ultimate high price of 69. That's where Bitcoin topped out in November of 2021. It's a few months ago. All right. Now, let's take the bigger time frame and count the legs. 1, 2, 3. I don't know if you see it. 4. So we got 1, 2, 3, 4 on the weekly. Now, you might feel like, Oliver, I didn't see this pause and I didn't see this one. Here's something interesting. I like when I'm looking especially at macro phases, I like to see 5 bars create a pause, right? When I'm looking at a bigger time frame like this. So count the bars. Look, let me open this up a little bit so you can see it a little clearly. Count the bars. 1. What bars are part of the pause? 1. I know it started here, but this is part of the pause. This starts at 1, 2, 3, 4, 5. Pause. All right. Here, this starts the pause. 1, 2, 3, 4. It's way more than 5. Remember I said that they're not always perfectly sideways. All right. And 1. Well, let's do. I'm sorry. 1, 2, 3, 4. Boom. 5. 1, 2, 3, 4. Let's see. But I believe there's good odds that we've got it. Not that this means this is going to turn around and go immediately to all-time new highs or anything like that. I'm just saying that we're closer to the bottom than we are to the top of this thing. We're closer to the bottom than we are to the top of this life-changing thing right here. And remember, in one of my prior talks, I told you my bands were going to get it. Did I tell you? Did I tell you my bands, Oliver Velez's band, did I tell you it was going to get it? Did I tell you? Do you see what's happening now? Remember that? Remember my friend? All right. These bands are catching again. Let's see. All right, guys. There you have it. The market has legs. How to read them, how to profit from them. Guys, this is my trading platform. Let me quickly change this to BABA. Now, BABA was my main play this morning, as you can see in the upper left-hand corner of this screen. Well, all the charts for the most part are BABA with the exception of the chart on the right side, or at least my right side. But if you can look at the lower bottom, you can see that my total gains for this morning, this was trading over a 10-minute period, $6,200. But the vast majority of that came from the BABA trade. And so I'm going to use the BABA trade today to talk about a very valuable trading concept, technical concept that I typically deploy virtually every single day in the markets. If not every day, definitely every other day. So if you get this technical concept that I'm going to teach you today, it's something that you're going to be able to repeat for yourself over and over and over again. And this is one of those concepts that I believe can be rewarding for a big portion of your life, as it were. All right. So let me do this. Let me bring it up here. It's easier for me to mark up the chart here. Now, the play was quite simple. We see that, first of all, I am looking, guys, at a 2-minute chart. And most of you who follow my work understand that most of my traders and I predominantly focus on the 2-minute time frame. All right. The two trading time frames are 2-minute and 5-minute, but the 2-minute is the most dominant time frame, and it is the best time frame if you are still in development mode. All right. Other time frames can eventually come into place, but it is my experience that when you're training and when you're growing and when you're developing, it is best to operate with the 2-minute time frame. It's that perfect time frame that gives you the perfect frequency of trades. If you go to a bigger time frame, your frequency drops. And if you go to an even smaller time frame, your frequency increases beyond where it should be. So the 2-minute gives you the right amount of frequency of opportunities and trades. Remember, your progress is going to largely depend upon your experience. And so if you're building your experience too slow, you're extending your journey toward that ultimate mark of trading mastery. If you bombard yourself with too much experience at the same time,
you will miss virtually everything. So the 2-minute gives us the perfect frequency of opportunities. Every bar represents 2 minutes of trades. Obviously, each bar that was green ended up higher than where it started. Each bar that's red ended lower than where it started. All right. And the tails or wicks are the extreme movements from the open and or the close. Now, what you'll also note is that I have 2 key moving averages on the chart, and these are our main 2. It's not the only 2 we rely on, but it's the main 2. It's the 20-period moving average, that's the blue one. It's the 200-period moving average, that's the red one. Okay, now listen. What you see here is to the left of the chart, you will find that this is yesterday's price data. Okay, all right, and as you can see, starting the 4th of August, we gap up in the morning. All right, so this stock opens considerably higher than the last price it traded at yesterday at yesterday's close. So that's called a gap to the upside, or a gap up open. Okay, now it's actually this second bar that I want to draw your attention to. Okay, and this is where the concept is going to come in. Now, I want you to know, I want us to go over how this bar was formed, okay? And I'm going to draw it to the right of the bar. First, the bar, every bar starts off with a dash. That's the first transaction, okay? Now, from this dash, from that first transaction of the 2-minute period, that the bar can start moving up or down from that opening transaction. In this case, BABA began to actually move to the upside. So I'm going to make that green. It began to move to the upside, creating a fat green bar. So this is the fat green bar part. Doesn't look like that now, but that's what it was at a certain moment. So we're watching BABA gap up to the upside and gap up way above its key moving averages. Okay, so it's gapping up way above its key moving averages, and it's already far away. It's extending the distance away from the key moving averages by moving up additionally to create that bar. Okay, now this bar can be bullish. And it also, which means that if it's bullish, that type of bar can mean that we're headed higher. That bar can also mean that we're probably closer to the end. So what's the difference? This bar sometimes can lead to greater upside, but sometimes this bar can lead to downside movement. Now, what's the difference? The difference is where that bar forms. So if that bar forms near your moving averages, the odds are that there will be more upside. Okay, note here that this fat green bar happens close to one of the key moving averages, and there was more upside. But this green bar quickly gave way. All right, this green bar quickly gave way. Why? Because it has formed far away from the key moving averages. Okay, so that's the difference. If a fat green bar forms near your key moving averages, the idea is that this bar has a higher probability of carrying forward, following through to the upside, continuing its nature. But if a fat green bar forms in an extended position, far away from everything, I call it Pluto land. It's far out there in outer space. That green bar will likely give way, or at least we're closer to the end than we are to the beginning. All right. And so that's important to understand. Remember when I was saying with my opening comments, you have to understand location concepts to trade properly, because location is actually, in many respects, more important than the event that we're playing. In this case, we're playing off the notion of an elephant, a bull elephant bar. This is what I call a bull elephant bar. But that bull elephant bar can actually mean we are just starting something positive, or it can mean we have just ended something positive. All right. And again, that's based on location. Okay. If this bar forms near one of the key moving averages, it typically means more continued green. If it forms far away from the key moving averages, it will tend to mark the end or suggest that you are closer to the end, that there's not going to be much further green produced from here. Okay. And so this is what we saw this morning. We saw this bar become fat green. Now, there was no red there yet, but what begins to happen? This bar, 25% of the bar starts to disappear. So now you have a bar like this. It's green. Sorry, I can't draw this so straight here. It's green, but it has a little tail at the top. Then another 25% of the bar disappears. Now the bar looks like this. Half tail, half green. Okay? And eventually, all of the green disappears. And this bar now looks like, terrible with this drawing thing here. But this bar looks like all tail now. It's 100% tail. All right. Let's see if I can do that better again.